Bitcoin is down 3.5% today, sitting at $62,532. And if you think that's the whole story, you're about to miss the most important setup of 2026. Let me explain why that pullback is almost certainly noise. We're in a window right now where the divergence between what the price says and what the on-chain data says is unusually wide. That gap always closes. The question is which direction it closes in. And the data is pointing somewhere that the current price absolutely does not reflect. Exchange outflows have been climbing for the past 3 weeks. That means coins are leaving Coinbase, Binance, Kraken, moving into cold wallets. You only do that if you're not planning to sell. Long-term holder supply, wallets that haven't moved their Bitcoin in over 155 days, is near its highest point this cycle. And the entity-adjusted dormancy flow, which sounds like jargon but is actually one of the cleanest signals we have for identifying distribution versus accumulation, is flashing accumulation. Quietly. While everyone's focused on the red wick on the daily chart, this is exactly how the big moves start. Not with announcements, with silence and patience from the wallets that have been right before. Now let's make sure we're all on the same page about what Bitcoin actually is. Because it matters for the price thesis. Bitcoin isn't a tech stock. It's not a startup. It's the only monetary asset ever created where the supply schedule is mathematically fixed and publicly verifiable by anyone on Earth. There will only ever be 21 million coins. Roughly 19.7 million have already been mined. Of those, an estimated 3 to 4 million are permanently lost, forgotten wallets, dead hard drives, coins from the early days that nobody can access. That means the real circulating supply is probably closer to 15 or 16 million Bitcoin. Think about that. BlackRock's IBIT ETF alone has accumulated over 300,000 Bitcoin since launch. Fidelity's fund is right behind it. MicroStrategy, now rebranded as Strategy, holds over 550,000 BTC on its corporate balance sheet. These are not short-term trades. These are multi-year conviction positions from some of the most sophisticated capital allocators in the world. They are not buying at $62,000 because they think it goes to $50,000. If this breakdown is helping you connect the dots, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. So what are the realistic price targets? Let's run the scenarios. The base case, which is where most institutional desks have their models anchored, puts Bitcoin between $95,000 and $115,000 by Q4 of 2026. That's not a moonshot call. That's a 50 to 80% move from current levels, driven by continued ETF inflows, the post-halving supply squeeze that takes roughly 12 to 18 months to fully work through the market, and sovereign wealth fund allocations that are still in their early innings. Norway's government pension fund already has indirect Bitcoin exposure. Several Middle Eastern sovereign funds are actively exploring direct allocation. When that money moves, it moves in tranches that dwarf what retail can even conceptualize. The bull case, and this is where it gets genuinely interesting, has Bitcoin testing $150,000 to $180,000 if two things happen. A Federal Reserve rate cut cycle that accelerates into late 2026, and a significant corporate treasury adoption wave where Fortune 500 companies follow the strategy playbook. Both of those are plausible, not guaranteed, but plausible. The options market is already pricing in asymmetric upside through December 26 expiries. Now let's talk about the bear case, because I'd be doing you a disservice if I didn't. The honest risk here is macro. If inflation reaccelerates and the Fed is forced to hold rates higher for longer, or worse, hike again, risk assets get hit hard, and Bitcoin is still correlated enough to traditional markets that it would feel it. We could see a flush to $48,000 to $52,000 range if that scenario plays out. That's not a collapse, that's a 20% drawdown from here, which Bitcoin has done multiple times in bull cycles without breaking the long-term trend. But if you're leveraged, if you're trading on margin, that move could be catastrophic for your portfolio, specifically, even if Bitcoin ultimately recovers. There's also regulatory tail risk. The U.S. regulatory environment has improved significantly, but it's not resolved. A policy reversal, a change in administration stance, or an international crackdown coordinated across major economies could create a sentiment shock that pressure tests even the strongest hands. And then there's the psychological risk, which nobody talks about, but is probably the most dangerous one for retail investors. Bitcoin could go from $62,000 to $95,000 and then pull back to $75,000, and most people would sell at $75,000 they're convinced the top is in, only to watch it hit $130,000 6 months later. The asset can be right, and your behavior can still cost you everything. That's the risk that doesn't show up in any price chart. So here's my honest take. Bitcoin at 62,532, with the on-chain data looking the way it does, with institutional accumulation continuing, and with the post-halving supply dynamic still working through the system, this looks like an opportunity that the short-term price action is disguising. The weekly chart is not broken. The macro thesis is intact. The dip today is the kind of move that gets explained away with some news headline, but is actually just temporary selling pressure from traders, not long-term holders. If you have a position, this is not the moment to panic out of it. If you're watching from the sidelines, you're looking at a potential entry point that the next few months might make you wish you'd taken seriously. Size it appropriately. Don't bet what you can't afford to hold through volatility. But the setup here is real, and the people who understand it are accumulating, not selling. Subscribe to Crypto Sayings. We break down the top coins every week, so you never miss a move like this. Hit the bell too, because these setups don't wait for you to remember to check back.